The global economy is facing its toughest test. AI and automation are promising growth but are also stirring fear. The tariffs, national security rules and surging debt are compounding the pressure. The Bloomberg New Economy Forum in Singapore, leaders and investors agreed on one thing. In 2026, businesses must do one thing to survive. Our next report tells you more.
AI and automation topped a forum's straw poll of the forces reshaping the global economy. They are viewed with a mix of apprehension and optimism. PwC Global Chairman Mohammad Kande, whose firm guides companies on the use of AI, said, "Do not think that AI will threaten your job. Consider AI as a digital colleague." Former UK Prime Minister Rishi Sunak said the tech could dramatically improve the efficiency and cost of government in regions like Europe. However, he acknowledged that in Western nations there is actually an enormous amount of fear and skepticism about AI. Companies will also need to be nimble as they comply with local and sometimes protectionist rules. On President Trump's trade brinksmanship, Hyundai CEO Jose Munoz said that tariffs show they need to overhaul supply chains by investing locally and using AI and robotics. He added, "You have to have higher productivity." HSBC's chief executive, Georges El-Hederi, said certain assets deemed crucial for national security, such as the code behind AI foundation models, as well as chips and data, will fragment and have national boundaries. He added, "All our customers will have to respect that, even as business continues to be conducted across borders." The executives in attendance had other worries, including whether the world's $251 trillion total debt is a little too high. Ashmore Group CEO Mark Combs said countries like the UK that are running deficits and relying on markets to fund them are definitely at risk of another Liz Truss moment. Truss was Sunak's predecessor. She had to quit after just 44 days in office after unveiling huge deficit-funded tax cuts that led to a market meltdown. The surge in debt from AI investments is also a matter of concern. The jitters over AI spending is set to grow as US tech giants are flooding the corporate bond market. Investors are uneasy that the rapid rise in public debt used to bankroll AI investments could strain the US corporate bond market. They bet that eventually those investments would dampen the appeal of tech stocks. Big tech firms are turning aggressively to the debt markets in their race to build AI-ready data centers. That is a shift for Silicon Valley firms, which previously relied mainly on cash to fund their investments. But the sudden pickup in debt issuance has raised questions about the market's ability to absorb the surge in supply. That is also feeding into growing worries over AI-related spending, which have triggered a sharp pullback in US stocks this month after 6 months of gains. Business Bureau WION World is One.
For all the latest news, download the WION app and subscribe to our YouTube channel.